So Ulrich Windischbauer, you're joining us today from the Deutsche Bundesbank. Warm welcome to the CEF. You've been at the bank since 2001, where you've held several positions in international relations, technical cooperation, financial stability. You've also worked at the ECB and in international and European relations, and at the European Commission on candidate and pre-candidate countries. Clearly, macroeconomic policy design and implementation in the context of EU enlargement is one of your key interest areas. And while you were working at the ECB, you wrote a very interesting paper on strengthening the role of local currencies and in EU candidate and potential candidate countries. And this was actually the starting point of the workshop that we held this week. Can you tell us in a few words, what is unofficial Euroization? How do you define and measure it?
Yeah, thank you, Marie. In fact, Euroization or dollarization, as it is more generally called, is a phenomenon that is quite prevalent in many developing and emerging economies. It is the choice of economic agents to partly outsource the functions of money to a foreign currency. So functions of money typically are the means of exchange, unit of account, and store of value. So instead of using their own local domestic currency, they use a different currency. And this is typically the result of low trust in the domestic currency, which may have different reasons. How do you measure it? The best way would be to have an estimate for foreign cash in circulation in the economy. The Österreichische Nationalbank, they have some kind of an estimate for that, but usually what is used, because the data is more easily available, is you look at the ratio of loans and deposits in foreign currency to total loans and deposits, and then this ratio then gives you an indication of the level of Euroization in an economy, whether it's low, moderate, or high, which is typically when it is above 30%.
But if a country wishing to join the European Union has such close trade and financial ties with the Eurozone, isn't unofficial Euroization in a way inevitable and also to some extent rational? What do you see as being the potential problem for so many of our countries?
I mean, it is true that it is a rational choice to use the euro, and that in particular for these countries that have a very close ties, both financial and via financial markets and trade with the EU, that the aim would not be to totally eliminate any kind of unofficial Euroization. So it is normal that a company that trades with the EU has some accounts in euro, and that a household that receives remittances from the EU or the euro area also keeps this in euro. So when we thought about it and when we discussed the issue, we thought about what would be an optimal level of Euroization. And from what I've just said, it's clear that the optimal level would be higher than zero. However, it would also definitely be lower than the levels that we observe currently, because there are some drawbacks connected to such high levels of unofficial Euroization, which have repercussions on both the monetary policy function of the central bank, of the economy as a whole, and of financial stability. So for the central bank, if you have a component in the money supply that is outside your control, the monetary transmission mechanism becomes even more complex, and you simply cannot, you do not have an impact on this component. So it makes it more difficult for the central bank to steer macroeconomic variables, to react to external shocks. And on the financial stability side, you have in the banking system, you may have currency mismatches on the balance sheets of banks. So in case of a realignment of the exchange rate, This may lead to problems. Also on the borrower side, you may have unhedged borrowers that have income in local currency and have taken a loan in foreign currency. That again, in case of exchange rate realignments, would not be able to pay for their debt, which then would be again a problem for the banking system. So that's why, in particular from a central banking point of view, we do think that there is a problem here that needs to be tackled. So not optimal level would not be zero, but it would be definitely lower than what we have currently in these countries.
Many of these operational challenges, which we've had the opportunity to discuss this week, we also had a very nice exchange on the study that you presented in terms of also the policy options that can help offset the cost of unofficial Euroization. You used the reference to dollarization in Latin America also as an illustration of challenges and possible solutions. Could you tell us in a few words what are, in your view, the key elements of a successful strategy?
Yes, so first of all, when we looked at case studies, countries that have had the similar problems and that have successfully taken measures to bring down dollarization rates, what we found out first of all is that it is a long process. So it's not something that you can change overnight, because it gets down to people's behavior, and it's about confidence, and confidence cannot be rebuilt overnight. However, we have identified sort of a set of measures that do have the potential to bring dollarization rates down, and we have identified 3 groups of success factors. First of all, it's macroeconomic stabilization. It's a necessary but not sufficient condition. So bring your macro policies in order, which includes obviously low and stable inflation rates, but also prudent fiscal policies. But this is not enough. So in the countries of the regions, we have observed very low inflation rates over the last couple of years, but still we have these high dollarization rates. So what comes on top is prudential regulation. There's a whole set of measures that can be taken. We think that there's no one-size-fits-all solution, but there is a set of recommendations from the European Systemic Risk Board that was issued in 2011, which would be a very good starting point. And last but not least, the third factor is the development of local currency capital markets, where governments can actually play a very active role, not only by issuing bills and bonds in local currency, but also by establishing a secondary market and incentivize also the establishment of a demand side. So you need buyers, not only banks that keep the bonds until maturity, but pension funds and even private customers, so that you establish some kind of a functioning local currency capital market.
And this aspect, this third pillar, the local currency market development, was at the core of the workshop that we held the last few days. Ulrich, I would like to thank you wholeheartedly, both in your personal capacity and as a senior economist of the Deutsche Bundesbank. You must have attended, participated in, and spoken at many conferences and seminars. What strikes you from the way the CEF works?
Well, it's been so far a very inspiring experience for me, I must say. I think that the approach of CEF is very good in a sense that you try to engage people into the discussion. So it's not like somebody speaks and the other people listen. So the interactive approach is something I found very useful for learning, actually, because when you just consume passively, a lot goes through your mind, you lose it. But when you you are actively involved, I think the results in terms of learning are much higher. I also think that you had in this particular workshop very well chosen the set of topics, the structure. So even though among the speakers we didn't know each other, but I think our presentations and our input was kind of building on each other. So that was very well chosen. And last but not least, the use of modern communication techniques. They have their limits, but I think it gives an additional ingredient for people to join online who were not able to come here themselves. And also, to include speakers like Thor, who was in Washington and was able to give us a very interesting presentation. So thank you very much again for inviting me. It's been a pleasure.
Thank you for coming, and thank you for this nice feedback. We look forward to working with you again in the near future.
It would be my pleasure. Thank you.